So let's look at BTC USDT. And see, like I always tell you, the market will give you, and the market will take back from you. So I want to apply our strategy into crypto. We don't trade crypto. I'm not interested in anything crypto, but we are working on setting up something for the crypto industry. And haven't seen how a lot of people are trading crypto. I know they are completely naive. So we are bringing in something into the space where we look at key crypto pairs to discuss on daily. And BTC will continue to drop. This is the buy structure for BTC. So I'm going to gauge it on a monthly time frame and tell you where the market, this is daily. And if I bring you to weekly time frame, on a weekly time frame, this is a monthly candle. So if the pair continues to drop, insist on dropping continuously in search of liquidity, it will find buy at this level, 64,000. That's the minimum crash, sorry, the maximum crash you can get for BTC on a monthly time frame. So let's go back to structure. And you may be doubting it, but let's look at some other parameters that we use as gauge to view the market. Now we are back on 4 hours on daily, sorry. So this is the daily structure. So you can see after break of structure, price create here on demand structure, demand structure, and if it returns here in a weekly time frame, you expect your buy on this ascending trend line. The price action here is very strong, and we also have another updated structure at this area. So it feels good to see a significant drop up to 65K, but that's not something that's going to happen too easily. So what the structure of the market is saying that let's look at a further break of structure to see the extent of damage and make a final conclusion on what we anticipate. We have here two previous highs broken on weekly time frame. On technical, price will return to respect that trend line. A previous broken supply roof is a current demand structure. So, and we got an affirmation on that structure before the final breakout of the structure. And to be more specific, we have price updating here as a supply roof, and a return as a supply roof. There is a final retest as a supply roof before break of structure. So if we are anticipating a strong bearish drop in price should return into 75K. That is what the structure is saying. BTC will continue to drop. And it will be a quick one, a quick drop, take profits, then return price, and so it's gonna be. So I'm putting this vertical line to cut across the weekly candle. So if on a weekly time frame we continue to fall, wherever it falls across on this ascending trend line is your buy order. So I'll be watching it, and I'm going to set alarm at this level. So my alarm will be on this level. So if price reaches this alarm, then I know that it's about to go down. So that is what I want to see at that level. So if that level is breached, then I will know using my vertical root strategy that price intends to come down into the demand the floor around 75,266.81. So I'm going to drop that trade idea weekly demand floor by will be at 75. Weekly buy idea at 75,064. At 75,064. Anticipating a buy idea. We are having the market already forming an M structure. And if you look at it on a weekly time frame, let's see what it looks like on a monthly time frame. On a monthly time frame, the market has already formed a clear M structure, and we have the neckline broken on a monthly time frame. Ladies and gentlemen, your BTC is about to go down. I'm not telling you to be happy, or to be excited, or to be angry, but I'm just telling you what the market is doing. Now, look at it here, an M structure on a monthly time frame. This is an M structure. After updating an M structure on a monthly time frame, then what I expect is that now the neckline is broken. I want a confirmation by another upswing. So what it means on technical is that price may find temporary demand and go back to retest a break of that neckline and continue on that bearish path until it returns to area of great interest. So what we see is a retest into the broken neckline and price comes down into 75 zone. So this is what you get on a monthly time frame. So that means from this month, next month, we could see more bearish drop of BTC. Anybody that tell you BTC is going up, just tell him he's a liar. But however, we are going to watch the monthly close. So before we go on to pass a final judgment on what we don't have control over, we have to allow the monthly candle close. The monthly candle has to demonstrate that this is actually a break of a neckline. So market has to demonstrate that it wants to break 92.940 on a monthly break of structure. So if on a monthly time frame that structure is broken and it's confirmed that the monthly candle closed below that structure, then ultimately it means that the structure has been broken and will now continue to look at a lower area of buy. And one of the key areas you're looking at for lower area of buy is on the weekly supply roof that was broken to become a demand floor. So if that happens, and you see what we've got clearly here, the hand have held price for a very long time and been broken on the weekly time frame. So if the weekly candle closes below 93.712, then buying potential have no hope returning back on a bullish footnote. Besides, the current Bybit hike half of 1.3 or $1.2 billion has really questioned the security architecture of the crypto ecosystem. So it questions the crypto cyber security protection and the safety of the asset of people. Of what value is it allowing your crypto to be in the hands of crypto brokers? So it's actually sending a shockwave, and a whole lot of people are moving their stuffs out into a private wallet. So it's part of what it is in the system that nobody is safe from mayhem. So what I see is that on a weekly time frame, price will continue to drop until price returns into a broken supply route becomes demand floor. But I'm setting my alarm a bridge of 81 level to signal me the price will continue to drop until it gets into the 75, 75, 74 demand zone. A previous broken supply route becomes a demand floor. But let's look critical again before we pass a quick judgment. Let's go down to a daily time frame. Haven't gotten our weekly analysis, then we want to make some corrections on a weekly time frame. On a weekly time frame and on a daily time frame. On a daily time frame, you cannot mess with the body of a candle. If you are a structural trader, most structures that are done on a monthly time frame and the weekly time frame requires correction on 4 hours and daily. The reason is because cutting the body of a daily candle does not show that you understand market structure. If you understand market structure, of course, higher time frame have a way of market reaction. So when you take them back to lower time frame, you need to look at opportunities to correct and make some alignments in market reaction. What we had before is not acceptable in the world of market structure before any professional trader. So we have to adjust it. So our litmus test is going to be price retest of this structure. So you want to see retest on a daily time frame into this structure to continue on the bearish path where we hope that price could come to 75, 74 zone. So it's okay to look at it like this, and if you choose not to look at it like this, it's okay. But we remain orthodox in our analysis, and we are against everything they told you in trading. Trading is mathematics. It's mathematics of pattern. So forget about all those grammars they speak, areas of mitigation, change of character, break of structures, and all that. Trading is mathematics of pattern. So if you study pattern and you stick to understanding pattern, then you should be able to interpret pattern in terms of demand and supply. So if you see pattern and you can interpret pattern in terms of demand and supply, I think you can be a successful trader. So even if you have some couple of bad traits, overall picture is that you have an independent mindset. That is what is the most important thing, is having an independent mindset, ability to be responsible for your own traits. Meaning that if you take a bad trade, you should be able to tell yourself that I took this trade on my own conscience. I misled myself. It's not because my mentor misled me. So today, see it as part of our trading mindset to be responsible for your own trade. So even if you see trade idea from your gurus, but when you click on buy and sell, be responsible for what you click on. Don't push it to your mentor. Your mentor does not have up to $1 billion in his trading account, so he doesn't command the market. This is a $6 trillion market, so nobody can say that he holds the market. Every day, several billions of dollars have been exchanged on the forex market. Nobody has monopoly of the market. So being responsible for your own trade will really help your mindset. Now we'll have structure broken on daily time frame, and we can see it on daily. In fact, we reached yesterday by way of close of yesterday daily candle. You could see that here daily candle here looking at it on the chart have broken the demand structure, and the next area price will be coming to react today will be on this floor. There is a strong floor on this on daily. We have a couple of daily consolidation at this level, and most likely price might want to respect it. Price might want to respect it at 90 87 376. This might come in for a daily buy. I'm just giving you this for free. The market will come there and react. Within this zone, you will see a market reaction. The reason for that is because after we had that bullish push, market created a couple of days consolidation on that zone. So my area of zone will be to wait for price at 75,000 into 74,000. That will be a confirmed buy idea. So it feels good to see that all I've spoken about BTC in our previous charts are always in line with our strategy, which is trading the structure of the market, and it's all like being the same. It's all like being the same. So let's see if price continues to come down, a push into 87,376 could possibly bring in some daily opportunity for a buy. So let's see it